You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's Thursday. It is 2:30 p.m. Eastern, 1:30 p.m. Central, of course. It is time for TWIFO. This Week in Futures Options, a program where we break it all down on the futures options side of the fence. What the heck's going on in fluid milk or pound dollar or who knows, wheat, oil, ags, you name it. Rates. We'll get to all of that and a lot more. I'm going to let you guys take the reins a little bit today. You always ask about different product categories, so let you guys dictate where we go this week. And joining me for this epic journey through the world of futures options, once again, my cohort here in futures options land. Almost started with your title. Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir. It has been too long.
Mark, great to be here. Great to be back for another show. Looking forward to some just fantastic conversation. Lots going on, so very excited to be here.
There is a little bit, just a wee bit, going on out there right now. But let's start, as we always do, at least usually. Sometimes when we have a lot going on, we can't do it. But these days, we're going to kick it off again. Let's start looking at the old dark side and the light side. You guys, as always, can play along with the home game. Generate your own reports. If you want to check out your fluid milk at 2 a.m., head on over, cmegroup.com/TWIFO. That link is always active, not just during the show. So you can generate your reports whenever you want. You can also generate our movers and shakers reports like we do every week here, in which case you can identify for yourself the top 5 in whatever frame of reference you choose, a month, a week, a day, whatever floats your boat. We're going to go back a week to our last show and see what's been lighting it up since then. Sean, you know what I'm going to ask you next? I probably know what you're going to say, but we're going to do this anyway. Where should we start this week? To the light side or to the dark side?
We are going light side. I'm back. as markets revert, they revert back to the mean, and my middle of the road is the light side. My glass is half full.
This week we had May the 4th and Revenge of the 5th, so it's even more in keeping with the Star Wars theme this week, sir.
I did not remember that correlation. That's fantastic. I like that.
I'm just waiting for Lucasfilm to reach out to us and tap us on the shoulder and say, by the way, you can't say light side and dark side. But until that day happens, we're going to keep pressing on. Let's go to the light side here at number 5 of our top 5 movers and shakers for the week. By the way, a lot of green on the screen this week. In case you didn't figure that out already, listeners, a lot of green on the screen, a lot of green on the overall markets coming into today as well, at least on the equity side. Most of the major indices up well over 1%. The S&P and the NASDAQ up nearly 1.5%. Russell having a good week out there as well. We'll get to all that in a little bit. But first, let's light up the top 5 here. Number 5, feeder cattle. Not one we see usually in the top 5 out there, or the bottom 5 for that matter. Up 8%, 8.08% since our last show. Number 4, our old friend, once again, rearing its ugly head, Class 3 milk, up 8.92%. Milk getting active out there. I was just talking to the folks over there at T3 on our crypto show this week, and they're cranking away on that milkshake index. So if you want to see what's going on the dairy side from a volatility perspective, at least what's going on in the ANZAC region, which is apparently the mecca, the hotbed for dairy exports, then check out that one over there. Class 3 milk up 8.92%. Number 3, live cattle. A lot of cattle in the mix this week, up 9.34%. We talked about them last week on the show. Went with the hogs, actually, but still, cattle have been active of late as well. Number 2, RBOB, up 20.16%. That means, I think you can probably guess what our number 1 with a bullet is this week, listeners. Yep, it's WTI back with a vengeance, up 21.28%. Since our show last week, it's been flipping negative. It's been rallying hard. It's been kind of inescapable what the heck's been going on out there in WTI of late. So we'll get to all that in a little bit. We're going to have you guys leading the dance with a lot of your questions in a few. Now let's go to the dark side here. Number 5 to the dark side. Mr. Shaw, you may have heard of this one. A rare, somewhat low placement for the Russell 2000 this week. It's not at the top of either the bottom or the top 5 this week. It's at the bottom this time. The Russell 2000 at a paltry 1.68% to the downside. Number 4, soybean meal off 2.03%. Number 3, pound dollar off 2.06%. Then we got number 2, platinum off about 4.25%, and number 1 with the bullet, palladium to the dark side off 7.3%. Again, you guys can run those reports for yourselves, cmegroup.com/TWIFO, and find whatever you want. Let's head on out. Sean, we were supposed to be joined today by our old friend, Mr. Tim McCourt, holding down the CME Group hot seat. A lot going on over there in CME land. So sometimes we have to adjust that schedule last minute like we did last week as well. So we'll have him back on soon. Well, one of the reasons he was going to join us today, Mr. Sean, was that there is a bit of a auspicious 1-year anniversary today. In fact, a little birdie sent me a photo right before the show that includes Tim and I believe you celebrating said anniversary when it kicked off. So do you happen to know what I'm talking about, Sean? What happened a year ago today?
It's a fantastic anniversary. Today is the 1-year anniversary of the launch, the launch of the Micro E-mini suite of product at CME Group, the most successful launch of any futures products at CME Group in its history. So there's a lot to celebrate. There's tremendous milestones and some record volumes to talk about. We're very proud of being part of that suite with our Russell 2000 micros, which are just doing absolutely fantastic in terms of volume. So we're very excited to be celebrating this with CME. Of course, virtually, we're not celebrating it with the CME together, but we are looking forward to having that celebration at some point when we can. But our congratulations to CME Group, to Tim McCourt, and the entire team there that has really created just a fantastic solution that has served the client base and the investor base and the trading clients of CME Group so extremely well. So congrats to CME Group.
I will say, speaking of celebrations, looks like you're having a fun time there with Tim and others. We're ringing the bell over there on the NASDAQ for this one. A huge crowd of you out there. So, yeah, maybe we'll get back to those days of huge crowds again sometime soon out there. Tim couldn't make it, but he did send over some nuggets to share with you guys. So it was actually a year and a day. So he missed it by a day, but we can't adjust the day of recording TWIFO, listeners, just to line up with some anniversary. But a year and a day ago, so it was May 6th, They launched these micro E-minis. It's on 4 benchmark indices, of course, the S&P, the NASDAQ, the Russell, and the Dow. And it's effectively, they even admit it now, it's the most successful product CME has ever launched in their 170-year history. A few days ago, they surpassed 200 million cumulative contracts since launch. So that's quite a few contracts in total as of this data is as of April 30th, about a week ago. More than 210 million contracts have traded. On an ADV basis, that's about 850,000 contracts a day. Now, obviously, this is a smaller bite-sized contract, so the contract numbers are going to be higher as a result. But still, when I remember Tim over a year ago coming on this show and teasing this, and I remember thinking, that's interesting, but it's not going to be something that I think is going to be the explosive hit that it turned out. I don't think anyone really expected this. So an ADV of 850,000 contracts. Clearly, you guys like yourselves some micro E-mini futures, and we've seen some turbulence and some volatility to lend to that as well. Worth noting as well, 20% of that volume occurring outside of U.S. hours, so a lot of international players playing out there in the micro E-minis as well. So interesting. We don't get a chance to celebrate it with Tim, but we'll get him back on the show sometime soon to get some insight into those, as well as what the heck's going on the CME equity complex. A lot's been popping off on there. We're working on getting the energy guys there as well. So we're going to get all of them for you soon, listeners, and we'll get to hear about all the stuff that's going on out there. Before we roll off equities here really quickly, there's another 10-year and 1-day anniversary, Mr. Sean. Perhaps a little bit less auspicious, going back to May 6th of 2010. Do you know what I'm referring to, Mr. Sean, here?
May 6th, 2010? Help me, Mark.
It was an inauspicious day. It was indeed the flash crash. That's when, of course, we saw pretty much every index getting slammed over the course of a few seconds and then coming back up. Dow losing over $1 trillion worth of value in just a few seconds. I told a story on our last show there about how I was meeting up with a risk manager. We are going to have fun, maybe lunch and some cigars, and then it turned out to be one of the worst days to be meeting, of course, especially for a risk manager because he needed to be back with his market-making group managing their risk on a day when there was a lot of risk. So I'll always remember it for that strange, rare scenario as well. So yes, 10 years and a day. It's hard to believe it's been that long. We were still doing Options Insider back then, so hard to believe it has been that long indeed. But yeah, it had already been about 3 years in and change at that point. So how the time flies. 10 years and a day since we all knew we were in a new environment. But I think the flash crash really woke everyone up to the fact that, you know what, we're in a little bit different ball game now. The algos in the driver's seat sometimes, and sometimes they can do aberrant things, and that's pretty much what we saw out there today. Luckily, we're in 10 years on. We're in a pretty much fully electronic market right now. We have some rumors about CME coming back. Maybe we'll get to those later, depending on your questions time. But we are in a fully electronic market now, and so far we haven't seen the extreme disasters of the flash crash. We've seen hitting circuit breakers. We've seen thin volume. We've seen light spreads, wide spreads. But we haven't seen these absurd intraday swings like this, which is hopefully a good thing out there. All right, Sean, I mentioned at the top of the show, I said we're going to devote a lot of time to the listeners. Are you ready, sir, to let the listeners guide us wherever they will? Are you ready for a futures options feedback palooza?
Let's go for it. You know, it's one of my favorite things is to answer listeners and readers and participants' questions, so looking forward to it.
How did I know you'd be excited? Let's do it then, a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. I promised it. You guys get to take the reins. Take us wherever you will. You can't write into me and ask, why didn't you talk about this? Because this is your chance. You always have a chance every week, but you get more of a chance this week to dictate the conversation. Let's see how many we can get to. Mr. Sean, first up, this one's right up your alley, Mr. Sean, comes from MGTK. A lot of people have this question. We've been answering this a lot lately. Clearly, you guys have been as well. He has a different spin on it, though. He says, does the coronavirus complicate any of the analysis or execution that needs to be done during the Russell Reconstitution coming up in June? Sean, clearly, our listeners are not the only ones who are asking this. I saw you guys over there, Russell, actually put out a big press release not too long ago testifying to this exact fact and what impact, COVID-19, if any, is going to have on the analysis and the dates. So clearly, our listeners are not alone. Everyone wants to know this. So maybe update us on the latest. What did you guys put out in that release, and how does all this stand as of right now? And if you have any info for MGTK and the rest of our audience about how, if any way, this complicates things, have at it, sir.
We put out a notice in early March that the schedule is going to continue as scheduled. There's not going to be any deviation from that schedule, and June 26th is RECON Day, of which the stocks exchange the transaction occurs at the closing bell on June 26th, and when markets open again on Monday, June 29th, the reconstituted U.S. Russell indexes will commence. So there is no change to that schedule. You can go to FTSERussell.com for an official announcement. Mark, I can also send it to you if you wanted to post it so that people have the dates of the adds and the deletes and the lockdown and other various milestone dates that culminate with the close on June 26th and the reopening on Monday, June 29th. Happy to forward that to you, or if anybody would like it, they can always email me smith@FTSERussell.com, and I'm happy to send you the link to the notice on the FTSE Russell website.
There you go. Have at it, sir, and listeners. Yeah, send us that info. We'll be happy to reshare it out there, listeners, as we get to all the. You guys clearly have it on the brain, and clearly a lot of the users over there in FTSE Russell land and their clients do as well. Everyone's asking that question, so good one, MGTK, as well as everyone else out there who asked it. All right, next up, let's see. Looks like we got some FX fans. Miles wants to know, can we get some FX back on the show? Maybe pound USD. Well, you are in luck, Miles, because we just mentioned at the top of the show there, pound USD, where was it? It was number 3 to the dark side, off 2.06% since our last show. Let's see how it's doing this week, as in this week in, a.k.a. the name of the show. Again, you guys can find this for yourselves, listeners, cmegroup.com/TWIFO. Go to that drop down, go there to FX, and then just select pound USD, and you could be off to the races. Coming into showtime, we're seeing that at about a 1.236. Getting way out there into the decimals. It's off this week about 1%, 2% since our last show. And let's see, coming into right now, we see the most active month out here in the pound USD. Looks like we're going out to, there's a lot of weeklies here. Interesting. A lot of weeklies. We're going out to June. That's going to get us out looks like about 28, almost 29 days. That's where 45% of the paper went up this week. By the way, vol listeners, up, looks like about half a handle kind of across the front portion of that curve. So getting a little bit firmer. FX vol has kind of been anemic for a while. Is the reason why it hasn't been really lighting it up here on the show of late. But every now and then we do see some wrinkles. There has been some, dire coronavirus news and other news out of UK as well. So that may be exacerbating some of this spread out here. But 45% of the paper out here in June. The vol in June up exactly half a point out there. So still pretty light though. About not even 10 points. So pretty light vol, all things considered out here. Let's see. Let's go out to the skew land. Last week, the puts in this June contract were about 11.1% rich. They have to mind this week, they're nearly 15% rich. So the puts taking the lead. Maybe not surprising. It's off about 2% since our last show and 1% so far this week. So puts getting a little bit of love out there. The calls were nearly 8% cheap this week. They're nearly 9% cheap. So they come in a little more than a point out here. Let's go on out to what the biggest print out here. By the way, if you're curious how much volume pound USD does from an option perspective, not a ton, about 21,000 going up out here this week. The big print, let's see, it looks like it's close to, actually, no, it's going to be in that front week contract with less than a day to go now. And it's going to be the 1.245 calls, doing nearly 2,000 contracts, the lion's share yesterday, 1,200, slightly biased towards closing, 600 today, and the rest kind of scattered throughout the week. So slightly closing, but still it's like a lot of churn and burn on that strike yesterday, probably as we're coming off away from that strike here today and yesterday. So that was, actually also the 1.25 even calls were 1867, so right behind it. You know what? It looks like a vertical, 1.245 versus 1.25 vertical went up, looks like about 1,200 times on Wednesday. So maybe they're rolling themselves up. It was opening slightly on the 1.25 calls and closing slightly on the 1.245. So that 5 times fast calls out there. So maybe it looks like a bit of an adjustment. An odd time to be rolling to the upside, but we've seen stranger things out there. Really quickly, let's see if any other interesting paper out here. In this June contract, the big print was the 1.215 puts, going up about a little more than 1,000 times. The big day was Wednesday. Wednesday, clearly the big day for this spread out here. 866 of this 1,043 going up on Wednesday. Pretty much all of that opening. So opening downside put paper. Again, not terribly surprising. So a little bit of action out there. What was the name of that listener? Miles. A little bit of action out there for you. Hopefully you got your FX fix. But we're not done here. You got Sean, I know you like yourself a good handle. This one might be our winner for... Well, we're not done yet. We might have others, but this one might be my nominee for best handle of the show. I don't know, it just resonates to me. Balkan Savage. Balkan Savage wants to know, hello, and thanks for all the content! Exclamation point. Well, you're welcome, Balkan Savage, and all you other savages, Eastern Europe and otherwise out there. He goes on to write, I have a question that I hope you might shed some light on for me as I'm stuck. Do you know of any way for a small and not so small guy to get in on the FX exotic currency options trading? The only thing I can find is the OTC stuff at the big banks, but that starts at 10 million. Regards, Balkan Savage. So interesting question, kind of confusing. I don't know what you mean by small and not so small. So you're both. It's kind of hard to be both. But, the FX brokerage realm is an interesting and highly dubious one, quite frankly. We've looked for years and tried to find interesting partners and contributors and content providers in the FX brokerage space, and never really have found any. I mean, there's a reason why the CFTC and others have really clamped down on the FX brokerage scene here in the U.S. In fact, you don't see a lot of major players offering FX here in the U.S. A lot of them have gone out of business. They've been driven out of business by various regulatory issues and scandals. They've moved offshore. It's a highly dubious area, quite frankly. One of the few times I've ever been at a major industry conference where they actually sat us down, the CFTC, just to read out the litany of scams that were happening against retail was in the FX space. So it's an area where I'm not exactly comfortable recommending a broker. It's also an area where I haven't really done a lot of recent research as to who the new crop of players are, who some of the more reputable and better players are now that space has shaken out a bit. So I'll tell you what, Balkan Savage, it's an interesting question. Maybe it's worth doing a little bit of revisiting on our parts. Maybe we can hopefully find you some players who are a little bit more reputable. The exotic side is throwing me for a loop. That usually is the realm of the OTC. That's why it's exotic. You don't really see a lot of retail players offering that. So maybe if you can follow up with a little bit of clarification on exactly what you're looking to do and maybe some more info on just something general on account size, it might help us out a little bit. But I think in general, it might be worth doing a little bit of a deeper dive into what's available out there on the FX retail brokerage side. 'Cause that side of the space has been decimated of late, and not without good reason. So it's harder to find a reputable player out there. But maybe we'll do a little due diligence for you. I'm not so sure I can guarantee the exotic stuff, but we'll give you a try, and we'll come back to it. If for no other reason, then you have a sweet handle. So have a sweet handle, you get rewards. I don't know, Mr. Sean, what do you think? Is that your nominee so far as well for handle of the show, sir?
Yeah, Balkan Savage, fantastic handle. Love that.
I like it. All of it just rings out to me. I don't know why, what it is about the Balkans that's resonating to me right now, but Balkan Savage, he gets the vote for a handle of the day. Or maybe we'll see. This next one's not bad either. Blackjack. Normally he might be a winner, but not today. Blackjack wants to know, do you think we can see negative WTI again? A lot of you have negative crude on the brain out here this week. Nothing is impossible, I think, as we've all learned here over the course of the past few weeks. Let's pull up WTI while we're talking, listeners. Going out to energy, then click on crude oil and WTI, and bam, you're off to the races here. You can see exactly what we're looking at here. If you're listening after the fact, listeners, make sure you adjust your dates, ranges in your report so you can see the numbers that we're seeing out here. I always like to hit select all as well. That's up to you. It's a lot of data, so be prepared for that. But if you hit select all, be prepared for the fire hose that awaits you. Also, another comment on this comes from Matt, also about negative crude oil. Matt says, looks like the CFTC didn't appreciate negative oil, and he's retweeting a link from Gunjan, the reporter out of the Wall Street Journal, who says the CFTC is going to work with CME to, quote, ensure that trading in upcoming WTI expirations is orderly and that futures, quote, disconnected from the physical market cannot effectively serve to discover prices or managing risk. So, yeah, a lot of people were not enthused to see a WTI trend so deeply, not just go negative, 40 handles in the negative direction. I think a lot of people were left scratching their chins about that, and I would be surprised if the CFTC was not looking into that, because what else is a regulator for than these outlandish moments in products? That's the time when a regulator needs to check out what is going on. So I am reassured to hear that they are looking into that. I am looking forward to the post-mortem on this as well, to hear exactly what was going on. We've heard about Chinese structured products. We've heard about a bunch of other things. Some people have unfairly maligned USO. I mean, USO deserves to be maligned in other ways, but it didn't cause that negative sell-off. That was other things going on, so it wasn't the role. But still, interesting stuff. Okay, back to BLACKJACK. Yes, I do think we could see it. If we see another scenario where, of course, we're seeing the storage issues that we saw before. Remember, these are physical commodities. They have to be delivered and or stored. And so there's costs to that. Also, you can't really shut down your well, so you have to keep producing. Otherwise, there's other costs inherent with that, and you may not be able to turn your well back on. So you have to keep producing, but you can't take delivery and you can't store it. What are you going to do? Well, that's a scenario. That's the perfect storm, if you will, of driving WTI negative. I do hope with a little bit of intervention we would not see such exacerbated things. We had some contributors on other shows suggest that they thought if the pits were open, we maybe wouldn't have seen that happen. That's an interesting point. The physical intermediaries can be sometimes a beacon of hope sometimes in those environments. We don't know because we obviously didn't have it, but it is an interesting point to put out there. Let's break down WTI really quickly and we'll get some more. What's going on here this week? It is our number one mover and shaker to the upside, up, 21% almost, I think, this week. Coming into Showtime now just this weekend, so coming in for this week, it is up about 17.5% at about 23.25 in that front future. We all know what's going on with that front future these days. I think the front future WTI is more in the mind share of the public right now than it ever probably has been before. So that's interesting in and of itself. So obviously the 23 strike at the money. Vol up in that front portion of the curve, about 3 odd points. And it looks like it's up pretty much across the board here as well. Not quite, obviously, the explosion we saw a few weeks ago, but still pretty frothy. We're at about, in those front weeklies, we're at about a 41 to 38 vol out there. You go a little bit farther out. Let's go on out to like July. And looks like we've got about 40 days to go for that contract. And that has a vol of about 29. So still frothy, still elevated, but nowhere near what it was and not what it is in the near-term contracts that are over a 40 out there. Let's go this week, though. The big paper was in the weeklies. It was in that front month contract. That's going the way of the dodo. Not too long from now, 6 days and counting, actually. Out here was that June contract, 49.6% of the paper in WTI this week. Let's see here. Vol up, like I mentioned, about 3 points, but again, it's only 6 days to go, or 7 really now. I usually don't like talking skew, that kind of contract, but so much of the paper was here, and this is where everyone's kind of focusing right now, so we'll talk the skew really quickly. The puts were about 7.5% rich last week. This week, 17.5%, so a full 10 points richer than they were last week. People are bidding up those puts. Maybe not surprising. Maybe some people concerned about what Matt and others are talking about, maybe a return to that negative time frame out there, and so maybe loading up on some downside as a result. Let's see here. The puts were there. The calls were 4.4% cheap, slightly less cheap this week, 3.5% cheap to the at-the-money this week. Again, if you're curious about skew and how all that works, check out the archives of our shows like Options Bootcamp and others to explain all that in a little bit more detail for you. The big print out here in the June contract was the 30 calls interesting. It's just not too long ago, we were negative 40. So now we're talking a call that is 70 handles in the other direction. That's the environment we're in crude right now, listeners. Just insane times. 20,000, almost 21,000 lining up the tape here this week. Looks like the big print was today. 13,600 going up today, about 5,000 on Tuesday, and the rest scattered throughout the week. Slightly biased towards closing, but again, we don't have the lion's share of that. The one up today, we don't have the OI for that yet. So nearly 21,000 going up there. The 20 puts also active, so a tight little strangle / risk reversal, 20-30. Not that tight, but about 10 points. 16,500 going up there. The lion's share for there was on Tuesday, about half of that, about 8,500 going up on Tuesday. The rest scattered throughout the week. Slightly biased towards opening, so it seems like there's a lot of back and forth on that 20 puts track, which makes sense. It's the nearest kind of even money puts right now away from where we're trading, right around the 23 handle off there. And again, people are concerned about a return to perhaps negative or more downside. So not surprising 20 puts are active. The 30 calls, that is a little bit surprising. Let's see, 35 calls were also active today, but not quite enough to really make a sensible ratio. About 4,500 of those today, 8,500 on the week. So it doesn't seem like there's a vertical for size going up here, at least on a ratio. Maybe that would be strange if you're rolling 30 calls to the 35s today. So I don't think that's a lot of vertical action, but it's kind of hard to tell. 35 is doing 8,500. The 10 puts, if you're curious about the far out of the money puts, they're still pretty active. 13,500 going up this week. The lion's share on Monday, 4,800, then 4,400 on Tuesday. Slightly closing there. So maybe some folks only slightly closing, though. So a lot of back and forth on the 10 strike as well. Again, if we go minus any handle, that 10 strike going to look a lot more interesting. And the 15 puts doing about 12,000 contracts this week. So a lot popping off out here in WTI this week. You guys have more questions about this. Let's get to more of them. NLTY wants to know, is USO, a lot of you guys still firing off about USO, is USO still exposed to super contango and the potential for WTI futures to trade into negative territory? Well, the good thing about USO, and I do believe Russell addressed this on the show a couple of weeks ago as well when we were doing our USO / WTI bonanza, is they're pretty transparent in what they're doing. For the most part, they have to keep some of that close to the vest, but like their rolling schedule and things, and some of the OTC stuff that they're doing. But for the most part, they're pretty transparent in their holdings. Like right now, you can go do this for yourselves. If you just type in USO holdings, they'll take you right to their site, break down their portfolio. Their target right now has obviously evolved. As I've said before, they used to be all front month, tracking front month WTI and rolling it right before expiration out there. These days, that of course has changed. They went initially from 80% front month, 20% second month. Then as things got crazy, they got the heck out of Dodge and they rolled wherever they could. Also, remember, they had so many inflows coming into them that they were hitting position limits everywhere, so they had to spread out. And they have done just that. As of today, their target weight for their portfolio is 15% July, so they're out of June already, 15% August, 15% September, 15% October, 5% November, 25% December, and then 10% June 2021. So right now, if you're buying WTI, you are effectively holding the broad spectrum of the WTI futures curve. And that could be good, that could be bad, up to you. It's not going to track that front month future the way it used to. But of course, in these days, the name of the game is keeping the product alive. And it seems like this structure is probably better suited to that. Tracking crude oil 1-to-1, different story. But again, you have a little bit different agenda. Their actual holdings, they break all that down to. They have a bunch of different positions across the board. Also, a lot of stuff in cash and in U.S. Treasuries as well. So that's going to cause a little bit of a drag on how they're tracking crude as well. So they have had a ton of inflows of late. They, of course, had their reverse split. They were trading over, I think, $20 recently as well. So a big change from when they were threatening to break the two-handle to the dark side. So there you go, a little bit of an overview of what USO currently has. It is no longer this machine that tracks front-month WTI and does a pretty dismal job of it. Now it is pretty much your play on the broad spectrum of what's going on in the WTI futures term structure. I leave that up to you, whether that's what you want or not, but that's what you're getting, at least right now. All right, Mr. Sean, another one here. This comes from ALET, A-L-E-T. They want to know, you discussed VIX RVX spread a lot. What about the Russell 2000 versus NASDAQ volatility? How did the two compare? So obviously VIX, RVX. In fact, we didn't even get a chance to do that today. Let me do that really quickly, Sean, before we get into his question. Coming into showtime, we saw the RVX, which is, of course, the VIX of the Russell 2000, at about 42.30. And we saw the VIX cash at about a 31.30. So that puts that spread at actually about 11 points right now, which is extremely wide. We just had Rick on the show last week. He said it averages around 3.5 points, and then it spiked out to 14 in the height of the madness. Well, we're not at the height of the madness right now, but the spread, at least, if you look just at the spread, we're getting pretty close to that. 11 handles is a pretty wide spread. That said, Mr. Sean, what do you have to say for Elite and everyone else out there who wants to know, how does Russell 2000 hang with the NASDAQ from a vol perspective, sir?
You can help me with that as well. The NASDAQ index is highly weighted towards technology. But I think the trade that people look at are large caps versus small caps. I think that's where people are looking, and why our spread is so widely discussed are those two areas in benchmarked indices. There is SIBO does calculate a NASDAQ volatility index, which has the acronym BXN. So SIBO does calculate that. But I think it's a large cap versus small cap discussion more than it is a NASDAQ versus Russell discussion. I hope that answers ALET's question. ALET. I'm into these acronyms, so I'm trying to.
Your guess is as good as mine on that one, sir. I'll let you parse the acronym. But you're right. There are still a lot of large cap names, even though the ones that get all the headlines are pretty volatile, like your Teslas. They're out there in NASDAQ, but small cap is still going to be structurally more volatile than your large caps. In fact, you're right. There is the NASDAQ VIX. I don't talk about it a lot. We said right now the RVX was at, coming into showtime, just had it up. Here it is, 42.30. By way of comparison, Elite and everyone else, the NASDAQ VIX is at about a 33.81. So interesting stuff out there. Frothy, very volatile. Compare that to where VIX is right now, 31.30. So slightly more volatile out there right now, at least. Again, VIX cash, all these VIX analyses, these are just kind of snapshots of where kind of front month at the money volatility with some skew and a few other things mixed in there really is. So there's a lot more to be looked at by going farther out the curve and things, but in general, you're right. The small caps are going to should have, if all things being equal, should have more juice than the large caps out there in either the S&P or in the NASDAQ. All right. Belly with an E. Belly with an E. They want to know what's happening out there in the 10-year. Well, Belly with an E. Let's find out together. Again, you guys can do this yourselves. Going out to the rates. Choose the 10-year, and you can begin your journey out here. All right, 10-year again. Not one we talk about all too often. Usually it's Eurodollars and others that are leading the dance, so we get a little bit closer to the front portion of the curve. But 10 years is an interesting spot, kind of right around the middle there. Let's see what's going on out there. Coming into showtime right now, we're seeing that 10-year future at 139.095 out there. That puts it up about looks like about not even 0.5%, about 1/3% out there this week. So the 10-year not on our movers and shakers for the week there, Belly with an E. And let's see, where was the action this week? It was out here in the June contract, 52.3% of the paper out there. So let's hang our hat out there. The vol there up about a 0.5 point, which is pretty strong because the vol, you're talking only about 4.3 vol out there. So a 0.5 point is substantial out here, but the vol is still anemic by just about any other comparison out here compared to your traditional equities or certainly to your small caps or even WTI right now. Let's see, 52.3% was in this June contract, and the big print out here, pretty sizable, was the 139.5 calls. By the way, if you're wondering, it looks like about 1.1 million contracts on the tape so far this week. So a pretty active contract, obviously. And the 139.5 calls out here in June are where the action is to the tune of 53,431. The big day is today, actually, 19,500. Got about 15,500 yesterday, about 15,000 on Monday, and a paltry 3,500 on Tuesday. Looks like a good chunk of that. Actually, not really. It's kind of back and forth. It's only slightly closing. So kind of a lot of back and forth on that 139.5 track, which is close to at the money. So it does make a certain amount of sense out there. How close on its heels, number 2 here, were the 139 even calls with 51,344 of those. The lion's share coming yesterday, 27,500 and about 17,700 today. On the put side, these are all pretty active strikes. Put side, we've got the 138 puts coming in at number 3 with about 47, almost just a tick under 48,000. The big print out there was on Tuesday, about 17,500, and about 15,000 on Wednesday, only a little bit shy of 10,000 out there today. Slightly opening for the week on the 138 puts. Also worth noting, 139 calls, about 11,000 of that was opening, of that 51,000. So a decent chunk opening out there as well. Let's look at the skew out here. Again, all's kind of light, so don't expect huge swings in the skew, but let's see what we find. The puts last week were 2% cheap to the at-the-money. This week, they are 1.6%, so a little bit of a change. Again, this is all the way out in the June contract. Still, it's only got 15 days ago. It sounds like it's far out June, but it's only 15 days. And then we've got the calls were 3.7% rich at the money last week. This week, 2.7%, so they come in a full point. So a little bit of skew evolution out here in the 10-year. An active week, not an exploding week, but a decent week out here, all things considered. This is usually an active contract. I'm not seeing huge pockets. So hopefully that gives you a little bit of a snapshot of what's happening right now in the 10-year. Belly. All right, next up. Options game. He's a frequent listener, and I think he said this in the last show. He wants to know, is there a difference between buying a future and 2 calls with a 50% delta versus buying a straddle? So buying a future with 2 calls for a kicker, each of them with a 50 delta, versus buying a straddle. Yeah, there are multiple differences there. I think sometimes people look at this and they kind of get conflated. They think of how, the market makers, a lot of the pros like to look at the strikes, which is, of course, they look at their net units. They look at their net positions by strike. And, of course, you can do that with put-call parity because, remember, most of those players are trading those things delta neutral. They're hedging out their directional risk. They're trading it really from a pure volatility perspective. So when you're doing that, the strike is really what matters, not exactly what you're trading out there. But most of the retail coming in to do this, and a lot of listeners of this show are going to be in the retail side, they're not going to delta hedge that. So you're buying a future, and then you're buying 250 delta calls. So yeah, you've got a very bullish position there versus your straddle, which is, of course, your position where you're looking at buying an at-the-money call and an at-the-money put. Pretty much whichever way the market runs, as long as you get a decent enough move, you're going to look all right. Of course, what happens buying straddles usually doesn't work out that way, and you get the death by 1,000 cuts that most people don't talk about when trading straddles. But yeah, I don't see why you would do that versus this. Why you can maybe something got lost in translation, and maybe there's a typo here. Maybe you just resend that options game with what you're looking at. But right now, yeah, there's a substantial difference between buying a future with 2 extra calls as a kicker on top of it versus buying a straddle. A very different beast. All right, Mike's charts. He's chiming in. He says, Quicksilver, laugh my butt off. Break out the 10 speed. I think he's referring to, Sean, when we did that poll a few weeks ago on the movie, the pit trading movies, and which one was their favorite. And he likes himself Quicksilver. Did you ever see that one, Sean, Quicksilver, where Kevin Bacon is a bike messenger and he's just biking around San Fran, and then at the end of it he just kind of wades into the P coast over there in the San Fran and just starts slinging equity options on like earnings day, the busiest day of the year, on a visitor's badge. Did you ever see that movie, Sean?
I can't. I've seen a lot of Kevin Bacon movies, but Quicksilver, I'm not recalling the biking and going by the P coast scene, so I got to say I don't remember it.
It's worth a watch just for that one alone. It's definitely one of the lesser heralded trading movies, and it certainly didn't win our poll. But it brought a smile to Mike's charts face. So we're glad if we can do that, then it's all been worth it. All right, next up, I'll let you break down what the heck this acronym is. It's just a mess of letters and numbers, Sean. It's 34 LOTRJK. He or she wants to know, do you think the EMINI Russell 2000 put activity you've noted is hedging or premium harvesting? Thanks for the program. Well, you're welcome for the program there, Mr. or Mrs. 34LO2RJK. Sean, they're referring to what we talked about a lot here on the show, and I'll have to pull it up today to see if that's true this week as well. But it has been in the past, whenever we pull up our TWIFO report on all things Russell 2000, we notice typically a preponderance of paper. Try saying that 5 times fast. In the puts. And it's usually a few months out, and it's usually pretty far out of the money. In fact, I'm looking at it right now, and that is the case yet again this week, listeners. We're seeing the Russell 2000 at about a 1278, almost 1279, and the big prints are going up yet again in the June contract. It's got about 42 days to go here, and it's the 9 double puts, 955 puts are leading the dance this week. So 43 days out, a little bit shorter than usual, but still a decent amount farther out. And 955 puts, so over 300 handle, about 320 odd handles out of the money puts. So it's happening again this week, like clockwork. So Mr. Sean, what are your thoughts? You're out there talking to the end users, the traders, the market making firms. You're seeing this paper go up over there on CME. What do you think is up? You think they're hedging, or you think they're harvesting, or maybe a little bit of both?
I'm thinking one's hedging and one's harvesting. I think you're seeing buyer meet seller, but I also wanted to throw in the 34 low trajectory. Maybe I'm trying to think of the acronym,
could be
the handle there. Anyway, definitely hedging, definitely harvesting. So the answer to your question, 34 low tragic is yes. They're doing both. Would be my answer to your question.
Maybe he's 34 years old, he's a fan of Lord of the Rings, so LOTR, and he's just kidding. How about that, huh? There you go. See? Making magic.
That's some serious analysis.
Who can play this game, Mr. Sean? You're not the only acronym guy in town here. All right. I might have to take that crown.
I have to say, I do have to say back to volatility within the Russell 2000. As you know, it does accelerate to the downside, as we've talked about, but then it also outperforms to the upside as you come out of economic stress periods. And, as of late, we have seen that outperformance. So when the Russell 2000 rallies, volatility does come in. So there is an opportunity there to harvest premium on these types of out of the monies. And there's also a hedging to protect those big moves, which are possible with a volatile index, right? So there's definitely a trading opportunity for those harvesting premium and also those that would like to have that downside protection in their portfolios. So it's actually a great question, and I love to talk about small caps and the movement of our Russell 2000 index with all your guests. So thanks for the question. And I loved your analysis just now. What was that again? 34?
So he's 34 years old. He's a fan of Lord of the Rings, but he's also just kidding. He doesn't really like it. So there you go. He's a little just contradiction kidding. In terms, this fellow. He's very deep, deceptively deep.
Nice.
All right. See how many more we can squeeze here on the old futures options feedback. Hope you guys are liking getting all your questions answered, because you guys have a lot of them. And you guys can pick where we go this week. It's all up to you. Let's see, Liam. Maybe Mr. Neeson writing in. He has a very special set of skills. Liam wants to know, looks like most of us are on the wrong side of this one, lol. And he's including tweet. Yeah, I was going to share this. I haven't gotten around to it. Maybe I'll do it after the show today. But we did take a poll last month, Sean, almost exactly a month ago, a little over it now, where we asked our audience, the S&P had just closed over 2,600, and we wanted to know, were you guys buying into that rally, or were you fading it? So you think, we asked you, quite frankly, where are we going to be a month from now? So that would have been, it was March 30th, I believe. So that would have been April 30th, a month. And quite frankly, you're going to be higher. So you think the rally is real. Lower, it's a dead cat bounce right around that 2,600 level, or you're in cash and you don't care. And so far, as of this poll, I think the numbers changed a little bit by the time it was done. This was early on that he's tweeting it here. But at the time, 19.3% were buying the upside. 63.2% of you were fading it. You're saying lower, it's going to be a dead cat bounce. So below 2,600 in the S&P. And just for a frame of reference, listeners, we're a little bit north of that right now. We're at 2,880 right now out there with another 32 handle rally today. So looks like the folks who were not fading it were the winners. But it's hard to take issue with the folks who were, because the structural issues that were going on then not exactly solved yet, and yet we're still seeing, a very aggressive V-shaped rally in the near term. And it has a lot of people scratching their heads right now whether these levels are sustainable. Our audience didn't think they were a month ago. I'm guessing they definitely don't think they are now. But hey, we haven't asked them. Maybe we should put another poll out there to get that. Maybe that's a good idea. Either way, I feel you there, Mr. Liam, with your special set of skills. Don't come looking for me with your special set of skills. All right, next up. Albert Adams. Is it still called stock substitution when you're doing it on an option on a future? Yeah, stock substitution, listeners, is a very popular strategy. We've talked about it many times, on a lot of our shows. Not so often on this one, but on a lot of other shows. Effectively, could be a position in a long index, could be a position in a long, usually it's a long equity, hence the name stock substitution. And you want to maybe take some of those deltas off the table, but still maintain your bullish exposure. So you probably dump the stock and swap it in to a longer term in the money call, usually probably at least 6 months out, and usually at least 70 odd delta, 75, maybe more, depending on how you like to play it. And then you have that position that's going to track a decent amount of the upside, but also obviously it's not 100 delta. And it's not going to be a full outlay either. So you're saving some capital, and you're doing all of that as a result. So that's what the strategy is. Is it called it when you're doing an option on a future? I guess that would be a future substitution, would it not? We're not really swapping stock. Of course, it depends what you're doing it on. If you're doing it on corn versus doing it on the S&P. If you're doing it on the S&P or the Russell, then you are kind of swapping stock. But it is still the future. So I guess you can call it more of a futures, or if you want to just get vague, an underlying substitution. Mr. Sean, where do you come down on this? Is it still stock substitution if you're doing it on an option on a future? Mr. Albert Adams wants to know.
That's interesting question. I'm going to go with your explanation there, Mark. So nothing for me to change on that. It's interesting. I just have never used that term myself. So
there you go. Complete agreement. Who knew? It's so easy here on the show. All right, and this another one. This next one, Justine IT, maybe she works in IT, or maybe she's Justine and she's it. Either way, Justine IT wants to know, does the higher volatility in Russell 2000 translate to better premium harvesting than in the S&P 500? Well, if only I had someone, Justine IT here, who knew such things, who came armed with data and who represented a firm who crunches these numbers on things like put rights in the Russell 2000 and everything else like that. So, Mr. Sean, this question sounds like it's right up your proverbial alley, sir. What do you have to say for Justine IT? Maybe she's Justine it. She wants to know, is it better premium harvesting in the rut than it is in the S&P, sir?
Great question. And you can take this question in several different directions, right? Because volatility moves. It ebbs and flows. It goes up. It goes down. And VIX versus RVX, we talk about the spread between the volatility of these two products, large caps and small caps, every single show. And we talk about harvesting volatility and the benefits of trading one volatility versus the other. It all depends is the right answer, and it's how you're trading. There is definitely a skew which has historically been known for a long time within a sharper skew within options on the Russell 2000 on rut options. You find it CBOE, but there's also skew in SPX options as well. So it all depends on your trading, your risk tolerance, your strategy on successfully harvesting that volatility. But for the most part, Russell historically is a more volatile index and trades at a higher volatility. Therefore, there is a higher volatility premium found in its options. So good trading. Trade Russell 2000 options, and please report back. I can't give trading strategies, but please enjoy trading the products and manage your risk wisely. I can't give trading strategies, but volatilities are what they are. I hope that helps and answers the question.
You know what, Mr. Sean, it's hard to believe that music means we come to the end of yet another epic journey through the world of all things futures options. Hope you guys liked taking the lead, taking the bit in your teeth, taking the reins this week, and directing us whither you wanted us to go. So if we didn't touch on a product category you wanted us to touch on this week, you have no one to blame but yourself. Get those questions in, get those comments in. If you want us to talk about palladium or whatever the heck it is that's lighting up your tape out there, hit us up, let us know. We'll do it. We're nice. I can't speak for Sean, but I'm a pretty nice guy. For the most part, we'll try to squeeze you in, unless it's a crazy negative WTI or something else blowing up week. Then we don't usually have time to get to the questions. But a week like this, we like to make sure we get as many as you guys on. We know you have a lot of questions. We've been answering as many as we can. We have the question huddle palooza there with OPR that's hitting the network today as well. We're trying to answer more on boot camp. If you guys have questions, we're here to talk you off the ledge, hopefully give you a little information, a little insights, and help you spend some time, hopefully productively, in these crazy quarantine times. Mr. Sean, before we go, I've heard you mentioned before you got a little webinar coming up soon. Where can folks go if they want to check that out for themselves? And what else do you guys have up your sleeves over there in the land of FTSE Russell these days, sir?
All kinds of stuff going on. And thanks again, Mark. Thanks for a great show. Really enjoy being on the show with you. We have that webinar next Tuesday. Mark tweeted it out. Go to the FTSE Russell website. You can find registration there. You can find it on Mark's website. He has the registration as well. SIBO's website has the registration. CME's website has the registration. You can email me at smith@FTSERussell.com. I'm happy to send it to you as well. So, next Tuesday you've got myself, the CME, Tim McCourt, and Kevin Davitt from SIBO, and Stephen DeSanctis from Jefferies, who's a fantastic speaker, of which we're going to be talking about small cap and volatility in that space, and it's going to be a fantastic discussion. So please register and join us on the webinar. A couple other things. There was a question today about RECON. We're definitely moving forward. We're still celebrating what was announced last week, which is our renewal of our license with SIBO to have the Russell 2000 options exclusively. So we're still celebrating that. So congratulations to SIBO, and really looking forward to working with the team there. And as we had Rick Rosenthal on the show last week, which was a great show, that we're still very, very excited about that. And again, congratulations to CME Group on the anniversary of the Russell 2000 micros in the entire micro suite, which has been just a tremendous success for CME Group. So congratulations to CME, Tim McCourt and company. But that's it. Great show, Mark. Thanks for having me.
There you go. Check them out. FTSE Russell, FTSERussell.com. If you want to sign up for that webinar, we'll also make sure we'll reshare that link, judging by your questions. A lot of you have questions about what's going on. Small tap, volatility, skew, everything else-wise. Webinar would be a fun one for you guys to check out. And, of course, we'll get them back on the show again soon. The folks from CME listeners, we'll fill that CME hot seat again with them once all their schedules settle down in the madness. In the meantime, of course, you can check out what they have to offer, including all the latest data and research coming out of Blue and Eric and their team over there. CMEGroup.com is the place to go if you want to get our reports. CMEGroup.com/TWIFO is the place to go. And on behalf of Sean and our friends over there in CME land, and myself, I thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. Remember, if you have a product you want us to get on the show and you don't think it's going to make it on for whatever reason because something else is trading that week, send us a request. We'll see what we can do. We're nice folks here. And we'll try to get it on the show for you. And we'll see you back here next week. Well, first off, tomorrow. We'll be back tomorrow for a little more of that vol views action. So like equity volatility, that's the show to check out. We'll be doing that 1 p.m. Central, 2 p.m. Eastern. We'll be back again on Monday. The whole network kicks off again, the option block, all that fun stuff, crypto. Right back through here again to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.